thank you for joining us again this Sunday evening. So, okay, I welcome each and every one of us to the August edition of the Meet and Chat with the Professionals. And this is a monthly meeting organized by the Finance Business Partners. Please, can you hear me? Please, can anyone hear me? Okay. So this is a monthly meeting organized by the Finance Business Partners to keep professionals informed and updated. If you are not familiar with the Finance Business Partners, we are a community of accounting and finance professionals dedicated to changing the narrative of the finance profession. My name is Faith Omodara and I'll be your host for today. Today's webinar is the first of its kind, a technical session centered on IFRS S1 and S2. Introduction to IFRS S1 and S2 is not just about compliance, it's about a paradigm shift that our roles as finance and accounting professionals extend beyond spreadsheets. We are now stewards of a broader narrative, one that aligns profit with purpose. This is why the Finance Business Partners has invited one of the best, if not the best, and the industry's finest to take us on this technical session. Mr. Bello Olamilekan is a graduate of accounting from one of Nigeria's foremost university. He is an associate member of the prestigious Institute of Chartered Accountants of Nigeria, a graduate member of the Institute of Chartered Management Accountants, and a graduate member of the Nigerian Institute of Management. He currently does statutory audits, including process reviews for top-rated financial institutions in Nigeria. Mr. Olamilekan has an in-depth knowledge of IFRS and he facilitates for one of the foremost ICANN accredited and an ACCA Platinum tuition house in Lagos, where he teaches financial reporting. He also has keen interest in financial management, corporate finance, research, among other offshoots of accounting and finance. As we begin this session, please pay attention and feel free to jot down any questions you have during the course of the session, or you could drop them in the chat box and Mr. Olamilekan will address to them as soon as it's done. Also, if you are not a member of the Finance Business Partners and you are interested in becoming a member, watch out for the chat box as we'll be sharing the link to our various online communities there. With so much joy in our heart, let us welcome Mr. Olamilekan. Over to you, sir.
Hello. Please let me know when you can hear me.
Yeah, we can hear you, sir.
Okay, yeah. Good evening, everybody. Thank you so much for having me this evening. It's such an honor to speak here on a very critical topic. I mean, relatively new. Is it relatively new? I mean, the most recent standard, financial reporting standard, we can't be talking about at this time, IFRS S1 and S2. So, I mean, I don't want to buzz because it seems more like a very boring topic too as well. So I'll try as much as possible to keep off with jargons within the standard and make learning very domestic as much as possible, as much as I can. So hopefully at the end of this session, we'll be able to pick one or two things in what the standard is really talking about. So, I mean, IFRS S1 and S2 are the new sustainability standards, and they were just newly issued June 26, 2023. And will become effective 1st January 2024. So what that means is that applicability would start next year, 1st January 2024, right? So the question is, what exactly are these standards talking about, right? So the first title, IFRS S1, right, is on the first title of IFRS S1 is on sustainability-related disclosures, right? Sustainability-related disclosures, whilst the second one is the climate-related disclosures. To be honest, the two standards are saying the same thing. If you look at the content of the two standards, they are really saying the same thing, only that where the first one, S1, is talking about sustainability-related discussions, the other one says it is specifically addressing climate-related disclosures. So it means that, I mean, if you look at the content of the standard, so where this one is saying objective of the standard. If the objective of the standard is addressing sustainability related one, the other one is saying climate related disclosure. I don't know whether that is clear enough. So, I mean, the two words will be used interwovenly if there is such English in the dictionary. So basically, the S1 is focused on sustainability related disclosure, whilst the second one, S2, is specific on climate related disclosure. So the concern is what would be in our mind again is why exactly are we having sustainability related standard at this time? I mean, we've had standards like IFRS 9, we've had crazier standards like IFRS 17. So why are we having why are we having IFRS S1 and 2 coming at this time? Yes, I don't know whether a lot of us are very familiar with COP. That's the climate of parties, right? So it's a UN program where they tend to drive climate change initiative. They tend to promote global climate change. Remember that in a lot of countries, right, climate factors really affect them. I mean, you see a lot of developed economies and they're affected by serious earthquake, for example. They're affected by, different climate factors that I cannot mention. So that is why United Nations have brought together what we call the Conference of Parties, COP, right? And what they do basically is to have climate change conference discussing climate change typically. So amongst over 167 countries, if I'm not making a mistake, and specifically in COP26, so they've had COP started in 1995, so they've had COP 1, COP 2, COP 3, so where they discuss climate change basically. Up to COP26, that was when they now said that, yes, we've made a lot of progress. We've told countries that carbon monoxide needs to reduce, CO needs to reduce, right? So how do we then align some of these things into financial reporting, right? You will see that a lot of entities, I don't know whether specifically in Nigeria, entities have started committing to global net zero position. I mean, I hope we know what I mean by global net zero position. Net zero position there means that a lot of countries and nations are saying that, yes, they want to reduce carbon emission totally. So they are saying that they want to achieve a net zero position by a certain year. Some will say 2030, some will say 2040, some will say 2050 is their own milestone, right? The intention is just to say that let us exterminate totally the impact of carbon monoxide, right? So if that is the case, that was why we have COP. And at COP26, they now said that, let's have the impact of some of these things included in our financial reporting, typically. And sustainability reporting has also been around for a while, right? I know a lot of us would have been hearing of ESG, basically. That's my own definition of sustainability reporting, ESG, typically. And by ESG, what do I mean? We're saying environmental, social, and governance footprint of an entity. So we want you as an entity to begin to tell us what is your environmental footprint, what is your social footprint, and exactly what about your governance. What all of these things means typically is that away from all the numbers that you see in the financial statement, away from saying, hey, this company made a gross profit of 50 million, they made a profit of 70 million, users of financial statements are now looking away from all of those things to some very qualitative information, and then so that they can make informed decisions from those perspectives typically. So they are saying that, okay, let us assess your ESG. Let us see your ESG footprint so that we can make decision. For example, if an investor in very developed economies like in the UK, for example, there are funds now that are created for green energy. Specific funds, investors only created that fund just to address green energy, basically. So, when you have some of those funds, and in some economies, they've started issuing bonds bonds. I hope all of us know what bonds are. So of course, they start issuing bonds that are green compliant. So when you have some of these initiatives that are now like growing in different areas of finance, the question is, as accountants, what is our own part? What is our role to play? What do we do in all of this? So I mean, that is why at COP26, the United Nations and the parties involved then decided that, yeah, let's have ESG incorporated. Let's have the impact of sustainability reporting incorporated in our financial statements. And before now, like I said, sustainability reporting has been around, only that people have just been doing it the way they like. There are existing frameworks in developed economy, like in the UK, there's what we call the TCFD, Task Force for Climate Related Financial Disclosure, TCFD. There is another one, Carbon Disclosure Project. So those are frameworks that some economies, developed economies, have that they've designed for themselves to guide them in doing sustainability reporting before COP26. So, but I mean, it is still not pronounced. If I ask any of us now, maybe again, a lot of us are even hearing sustainability reporting for the first time. So it's still not pronounced. It's still more of a lot of entities, particularly in Nigeria, are still just like committing by word of mouth. They've not started drive. They've not like really get on it to say, okay, yes, this is how we want to start. Our carbon footprint, this is what it should be. Our own net zero emission, we want to achieve it by 2050, 2040. So they've not started all these things. So that is why the COP26 guys have now then said that, yes, we need to have this thing documented. We need to come up with standards so that when people have standards, there is a structured way with which these disclosures are made, so that what disclosure entity A is making is exactly the same as or comparable as what entity B would make, so that I can, make decisions based on comparability. I can also see consistency in what they've done typically, and that's the whole essence of introducing sustainability reporting. So at that COP26, a new entity was created called the ISSB, International Sustainability Standard Board, ISSB. Remember, the usual IFRS that you have is issued by who? The ISB, International Accounting Standard Board. So they then created ISSB, right? The ISSB was now like, when they created it, what they now did was, because there's an existing body that does financial reporting already. So, there's no need to now begin to give ourselves a headache. What they did was, okay, so this ISSB, let it be one of the related or affiliated entities of the IFRS Foundation. For a lot of us who are very familiar with the structure of the ISB Foundation, right, you will see that ISB is a board that issues standards, right? But then is a subsidiary entity to another entity called the IFRS Foundation. So the IFRS Foundation is like the holding company that makes decision for any standard that you want to issue. They do the funding, they do every other thing. There are other entities like the IFRI, like the advisory board and all of that, interpretation committees too as well, right, within the framework. But again, IFRS Foundation is the ultimate parent company. So they now, COP26 now then said that, since we have like a body regulating financial reporting globally, so let's have ISSB, let's have it as a sister entity to IASB. So meaning ISSB and IASB are both sister entities to IFRS Foundation, who is the ultimate parent company of all standard issue setting bodies, if that makes sense. So they created ISSB at that COP26, right? And I think COP26 held in 2021, if I'm not making a mistake. COP26, I would confirm before we finish, when COP26 held. So that I'm really sure of what I'm talking about, the date of COP26. Like COP holds like virtually every year. So I think COP26 was in 2021. Yes. That was when COP26 held. So, 2021. Yeah. Thank you so much for also confirming. Yeah. ISSB was created, and then the sole responsibility that they had then given to them was, okay, please start issuing the standard, sustainability standard. They then issued the pair of IFRS S1 and S2 as the first set of standards. So what exactly is the objective of this standard? Like I said, the standard are very much related, only that where IFRS S1 is talking about sustainability reporting, sustainability related disclosure, S2 calls its own climate related disclosures, right? So, I mean, the objective of IFRS S1 basically is to disclose information about an entity's sustainability related risks and opportunities that is useful to primary users of general purpose financial statements. I'll take that again. The objective of IFRS S1, why it was really issued, right, is that, I mean, is for an entity to disclose information about its sustainability related risk and opportunities that is useful to primary users of financial statements, basically. So, I mean, that's English. What exactly is this saying? Two keywords, risk and opportunities, are what I could pick there. So it says that sustainability related risk and opportunities need to be disclosed to users of financial statements. So, I mean, that's what the objective of the standard is saying. It's saying that, please, let's have a disclosure to the users of financial statement that talks about risk, an entity's sustainability related risk and opportunities. The primary example that was given in the standard, for example, is if water is a relevant factor input. So meaning in your factor of production, water is a very key input in your factor of production. So remember, having water can pose both threat and opportunity, right? Imagine being in an environment where there is drought of water, right? I don't know those places in Lagos. Maybe somebody can remind me where we have like massive droughts of water. There's no water, limited availability of water. It means that production could be affected. It means that a lot of things. It means that it could. For auditors will say that where there is massive shortage of that water and they assess it, it could even impact their going concern assessment as an entity. To be honest, I mean, it could even be an indication of providing impairment for a cash generating unit. Imagine having a CGU in their abroad, a cash generating unit in their abroad, and the environment where that entity operates, the major factor input, meaning the major raw material, which is water, that they use is now not available for that particular period. I mean, that's a risk. So the concern is users of financial statement want you now as an entity to, away from saying this is our revenue, this is our cost, to no, tell us some sustainability risk that you are exposed to, right? And that's what S1 is saying. So in S2 now, it will then be what? Climate risk that you are exposed to. So where your weather changes, for example, where you have issues concerning climate in entirety, then it could pose both threat and opportunities. So users of financial statement are saying that, please tell us, let us know what the threats and the opportunities are. And that's what the objective of the standard is talking about. I don't know whether that best explains or introduces what the objective of the standard is talking about. Again, it's also instructive to note that, I mean, I see sustainability reporting again as that we're saying what are the different value chain of activities, right? Because if you look at an entity, a lot of us will just look at financials, and the financials would have come up through different activities like customer service, for example, activities like what they do to their suppliers, for example, activities like what they do to their customers, the kind of rebate they do to their customers, what they do to the societal impact that they have, right? Relationship with the government, for example. All of these things are different activities within an entity's value chain that could impact some of their numbers, right? Or that could impact the business as a whole. Remember, again, like I said, we have left the era of just looking at the numbers alone to an era where all this qualitative information are now very relevant to users of financial statements. Imagine I want to invest in a company and I see that, they have a massive opportunity in particular line of business, or they have a risk or a threat using one specific factor input that they don't have. I mean, that tells me to be very cautious with my investment, or it tells me to invest more if the opportunities are what suits me. right? And just like IFRS is, when you talk about objective of the standard, the next thing you'll be talking about typically is what then are the scope of the standard? What exactly is the scope of the standard? So the standard applies to all entities that wishes to make this disclosure, basically. I mean, irrespective of the specific accounting standard you are using, whether you are using IFRS or you are using US GAAP or you are using UK GAAP, typically. So it's saying that, yes, I mean, the standard is applicable to all entities that are willing to quickly adopt some of these things, basically. Again, the standard is very clear in the scope to say that the sustainability risk we're talking about is not an umbrella one. Is the sustainability risk and the climate risk that is specific to the entity. I'll give an example, right? If you allow accountants to don't mind me, I like to banter accountants. So if you allow accountants to just like do stores haphazardly, if you allow them to just do sustainability reporting anyhow, they will just bring in risks that are not even related. They'll bring in sustainability discussions that are not even related to the particular entity. Some can even just Google and just download everything in their financial statement. So that is why the standard is saying that no. I mean, if you are reporting any sustainability related risk at all, then please let it be the one related to you as a business line. That is why I've said that if water, for example, is a factor input, right, that is applicable to you as an entity, is a relevant factor input for you as an entity, then what we're talking about is that please disclose it. Then if the way we have earthquake in other economies, right? In other economies, like I think we had one in Japan some few years ago. So the way we had it there in Japan, and we see that in Nigeria, we don't suffer from some of these natural hazards, then I mean, that might not be applicable to you. So you do not need to then make disclosures or any of those disclosures in your financial statements if you are in entity. So again, what is instructive for us is that we need to know that the sustainability related risk and disclosures we're talking about here has to be specific to you as an entity. Again, it applies to climate risk. Remember, we're talking about IFRS S1 and S2 together. So where S1 is sustainability related and climate is S2. Again, climate is a subset of climate risk is a subset of sustainability reporting. I hope we know. Like I said, ESG is what sustainability reporting talks about, right? So, and when you say ESG, environment, it is climate is a subset of the environment, right? Climate is an environmental factor, right? So that E in ESG is talking about different factors, environmental factors affecting an entity. So it means that IFRS S1 is like an umbrella of all ESG components, while IFRS S2 is much more specific and bespoke for climate. Yeah. So then again, the standard, after talking about the objective, I've talked about the scope of the standard. Then the standard talks about what we call the IFRS. The start talks about conceptual foundation. Yes, conceptual foundation. Like IFRS is. I mean, a lot of us know the conceptual framework in IFRS. So in IFRS, we have what we call the conceptual framework. That's like the background upon which standards are introduced, evaluated, assessed, and all of that. So we have that conceptual framework in financial reporting. So ISSB2 now introduced what they call conceptual foundation, right? And it's very similar to, in fact, it's a total adoption of what the conceptual framework is talking about, right? Remember, in the conceptual framework, we used to know that we have two basic characteristics of financial statements, right? We know that we should have the fundamental characteristic, and we should have what we call the qualitative characteristic, right? Where we say the fundamental characteristic is the relevance and the faithful representation, right? I mean, we're saying that for you to have a financial statement at all, for you to say, yes, this is a good financial statement, that financial statement has to pass fundamental characteristics and the qualitative characteristics. Just the same way, for you to say that, yes, your sustainability disclosure is adequate or passes the requisite standard, then it has to pass what we call the two fundamental the two characteristics too as well. Again, the standard IFRS S1 calls it the conceptual foundation, right? And again, they have two characteristics: the characteristics of the relevance and faithful representation, right? Faithful representation, and of course, relevance and faithful representation. So relevance there means that information has to be relevant, of course. While faithful representation there means that information should faithfully represent what it purports to be representing, right? I mean, if we say that your total carbon emission is, say, 500 degree, for example, right? Then that information has to be faithfully representing what it purports to be representing. That's faithful representation. Relevance, I mean, information has to be relevant. A lot of other discussion around that. Again, that's where materiality comes from. If you look at what the conceptual framework is also talking about, it's from those two concepts that we inferred materiality. So where we say an information is material, where omission or inclusion affect decision users of financial statement would have made. Yes, materiality is also in the conceptual foundation too as well. So aside the two relevance and faithful representation, IFRS S1 also talks about materiality. And it also says that material in the context of, so let me just cite how it is quoted. It says that in the context of sustainability related financial disclosure, information is material if omitting, misstating, or obscuring that information could reasonably be expected to influence the decisions that primary users of general purpose financial reports make on the basis of those reports. I mean, similar to the definition of materiality that we know. Like we always say, materiality is entity specific. For a Dangote, for example, 1 million might not be material, 1 million or 100 million might not be material, whilst for another entity, 20,000 can be very material. So again, this sustainability reporting standards also uphold the concept of materiality. So again, the standard also talks about some other qualitative characteristics like understandability, that the disclosure information you are disclosing as your sustainability related disclosure or your climate related disclosure have to be understandable, have to be reported timely, have to be verifiable. All those verifiability, understandability, timeliness, right? All those things, all those good stuff, comparability. So those are other qualitative characteristics that the standard also talks about, that your sustainability reporting information has to also have, right? And when we say timeliness, like, I mean, for example, just imagine presenting, I think I'd worked on a project where the project was a 2020 account and lingered till like 2022. And when we go to the board, for example, to make presentation, right, the board were just like, please sign this thing and let's go. Because, I mean, what do we want to start saying again for a 2020 account when we're in 2022 already? So all those things are what is also inferred in sustainability disclosures too as well. So then the standard also talks about one new part, different from the conceptual framework, is that it talks about interconnectedness. It says that your information you are disclosing in your sustainability report have to be interconnected. So meaning there are elements of sustainability reporting that we're going to be discussing in a few minutes. It now says that those elements have to be interconnected. So meaning what you're saying in paragraph 1, for example, has to align with other notes to the account, has to align with the qualitative numbers and even quantitative numbers you have reported in your financial statement. So that's what that part is saying. It's saying that information you are reporting has to be interconnected. So again, the standard, then the two of them, both IFRS S1 and S2, also talk about what should be the content, what should be the core contents of a sustainability related reporting disclosure, right? So it talks about 4 key elements of what should be found in a sustainability related information. So it says number one, governance. So you have to talk about governance. Remember, I talked about the fact that sustainability reporting is basically ESG. So that is also coming out to play out here. It's saying that number one thing you should talk about is the governance around your processes, around your controls and procedures. Imagine having a financial statement, and I am reading the financial statement, and I'm seeing the general oversight that my entity has around sustainability reporting. I'm seeing who owns the responsibility. Is it the board? They tell us in the financial statement that, Mr. A is responsible, Mr. B is responsible for this particular thing. These are processes that we've instituted towards achieving the 2030 net zero emission, for example, right? So governance, and I'll give you a very practical example. I've also seen in Nigeria that some entities have started installing solar panel, for example. Meaning they don't want to even use the conventional plants. They don't want to power plants again. All of these things have implication. If you are not powering your plants, right, that could even mean that, imagine a manufacturing company saying that, no, please, we want to go green. And if we are going green, no, we want to opt for alternative energy sources like, say, solar. Imagine, what it means is that their PPE, for example, you need to start discussion around what happens to the PPE. You need to start discussions around the fact that, if they give you a cash flow assessment, and the cash flow assessment has element of forecast from PPE, benefits flowing from there, you need to challenge some of those. So these are why some of these things is important for us as accountants, to be able to be abreast of some of these things and be able to make informed, so that users of financial statement can make informed decisions around them. So like I said, number one is governance, and governance just talks about who owns sustainability reporting, who tells us, who assesses the risk, what are the different processes, who owns the processes, what are the policies that the entities have designed around how they want to achieve sustainability reporting. Tell us, or around your climate change documentation, basically. So tell us who owns the responsibility. Again, if I'm looking at a sustainability reporting, I have to be saying number two, strategy. Away from governance, I have to be saying strategy. Strategy just talks about what approach the entity uses to manage its sustainability-related risk and opportunities, right? Imagine having risk, and you've also talked about your opportunities. So what strategy are you using? Are you adopting to pursue the opportunity, to make sure that you're maximizing the opportunity and to also minimize your risk? So, number three is on risk management. So what processes the entity uses to identify, assess, prioritize, and monitor sustainability risk and opportunities. Remember, risk management, of course. And I think I like some of these things, to be honest, because imagine having risk documentation included in your financial statement as a whole as well. It means that you are giving users of financial statement detailed information away from just saying the numbers. Imagine if the case of Enron, we had some of these massive disclosures. Somebody would have seen, for example, that, some Sakamanje forgive me to use that word. Some Sakamanje is going underneath. Some of this, a lot of filthy activities that management perpetrates would have been shown or disclosed typically. So, risk management is also how are they managing the risk? What processes do they have in place? Are they identifying the risk? Are they prioritizing the risk typically? Then the last part is metrics and targets. So metrics and targets basically talks about the entity's performance in relation to sustainability-related risk and opportunity, including progress towards any target the entity has set or is required to meet by law or regulation, right? Expectedly, I expect that IFRC, which is the Financial Reporting Council of Nigeria, should take up this standard now and then maybe design a framework for people to adopt. In other developed climes, right, they've come up with, say, please, every entity, you need to tell us your plan for, say, 2030 or by 2045 or by 2050. You need to tell us what your net zero goal is. You need to tell us. So if I expect that some regulations of that type should come up in Nigeria, even though in Nigeria we used to argue that climate change is not really a thing, is more of a problem of the West than than a problem of African countries like Nigeria. I mean, we believe that. I remember there was this discussion. During the political debate, during the election debate, there where we're saying that, where people were saying, okay, so what exactly is the impact of climate change on, I mean, economies like Nigeria? And some school of thought believe that since we do not suffer from some of these things, it is the West that should make massive efforts. We ourselves, you cannot be telling me to grow tree, to grow these things and that, where in my own environment, I do not have massive CO emissions, for example, and no. So they believe that, some school of thought believe that no. And because I don't suffer from some natural disaster like the way some other economies would do, then I mean, I shouldn't be making some of these, we shouldn't be making some of these efforts, basically. Again, arguable. So, but metrics and targets says that certain regulatory body has to come up with some metrics, some targets, some goal, specific goal for the entity. If there is none of that, entities too need to come up with their own metrics and targets to say that by 2060 or 2065, this is where we want to be. So, I mean, these 4 components that we have discussed are the critical content of a sustainability report that you should find. So it means that if you open a sustainability reporting, these are the 4 things that you should be looking for. You should be looking out for what is, I mean, who are the owners of these sustainability risk and opportunities they're talking about, what framework do they have, what processes have they designed. Then the second part is the strategy. What approach are they using to minimize the sustainability related risk that they've talked about? Imagine saying water is a risk for you, for example. So what measures are you then instituting to make sure that you are minimizing that risk and it's not affecting your business concern typically? So number 3, we talked about risk management, and number 4, we said metrics and targets. I think that those are the key elements of what the IFRS S1 and S2 is talking about typically. So yeah, so is there any other part I've not talked about? Yeah, so I mean, I've looked at the standard and basic core content are just what we've discussed. I don't know whether there are questions for me typically.
Okay, thank you very much, Mr. Olainka, for that amazing time. Please, if you have any question here, Mr. Olainka is taking questions now. If you have any question, please raise up your hand, or you could drop it in the chat box. If you have any question, please, if you have any question, can you just raise up your hand? Any clarification or even any addition, anything?
Okay, so I think we have people raising up their hands. So I think
Yes. Okay.
Hello, can you hear me?
Yes.
Okay, interesting. Yeah, thank you very much to our speaker, right? I would just like to probably, whether it's a question or some sort of addition, right? Because I've reviewed the financial statement of the like of Shell and Chevron in the past, and then I've seen places where they are talking about ESG in this report, right? So, and mostly this is always around the CO2 emissions and similar stuff. And the way they've always been reporting these are like how well they are managing what's it called, containing the CO2 emissions, year on year comparison kind of a thing, and then their different strategy and impact of their activities within the environment, right? So I would just like to ask if with this new standards that we have? Is it now that this standard will now even inform more on how they are supposed to be going about it, or they are already on track kind of a thing, and probably it is not really expected that they follow the new standard, or probably they have a particular regulation that they followed before now? And what will be the impact of this particular standard in what they have been doing before now? Right.
Yeah, beautiful. Okay, so let me go for that. Thank you so much. I mean, like I said, a lot of entities have started talking about ESG. And like you rightly put, top entities like Shell, for example, have started saying, "Oh, this is our CO2 impact, and this is where we are going." Because again, some of them even operate in international. They operate in developed economies. They operate in other different countries where some of these things are much more pronounced. For example, I mean, for them in the UK, they have to say, "Oh, this is our CO2 plan. By 2050, net zero emission is what we want to achieve." So that is why you would find out that entities like Shell would have started it. So the concern is it adequate? That's where the conversation would then start from. And like I said, there's a TCFD framework before now. In fact, I have reviewed the TCFD framework, and specifically what it is talking about. The core content is talking about is what this IFRS S1 and S2 are talking about. It talks about governance, strategy, metrics and targets, and risk management. Only that, I mean, it didn't call out stuff like, conceptual foundation we talked about. It did not call out specific scope of the standard and all of that, right? So like I said when we were discussing, so what this does again is that we have a standard that we can then auditors, for example, who owns that responsibility to challenge what management has done in this space. They have like a standard that guides them now. They have like a checklist with which they are going to be benchmarking the reports management has made. Remember when it was haphazard, when you could just do anything you like, or there was no specific standard speaking to some of these things, you could just report it anyhow. And of course, there is no metric with which we would evaluate. So that's why we're saying here now that yes, IFRS S1 and S2 has then been introduced to give a much more structured approach to doing it. The concern is, I mean, it's possible that what they are doing or what they've been doing over time is even up to standard, right? So again, compliance to IFRS S1 and S2 is to say that, what are the key elements of IFRS S1 and S2? Are these key elements captured in the report that they've rendered to users of financial statements? So what would be the impact if they are not like doing enough? It means that, and like I said, I think you also mentioned, you said that the share report that you looked at, much more focus was just on CO impact. Now we're saying that sustainability related risk is much more than that, right? Which is the S1 part of it, is much more than that. We're saying, please look at E, S, and G. You need to talk about your environmental impact. You need to talk about your social impact, and you talk about your governance typically. So all those three elements are what you are going to be talking about in the line of governance, risk management, metrics and targets, and number 4, which I can't recall, right? So that's what we're saying. We're saying that away from just talking about CO2 emission, you are going to be talking about the value that you add to the environment. You are going to be talking about what environmental threats or factors that could impact your business. You are going to be talking about key resources, key factor inputs, for example, that could impact. I mean, those ones are not climate factors like CO2, for example, right? So, I mean, all those things have now been included in the new sustainability reporting standard. So, I don't know whether that answers the question.
Very well, it does. Thank you very much.
All right, brother.
Thank you very much, Mr. Olamileko. I'm sorry for the mistake I made the other time. So, okay.
No worries.
Yeah, so I think someone else was raising up their hand. But we have one question in the chat box. So someone is asking that in what form will the report be in the AFS? Can you hear me?
Sorry, I didn't get that. Say that again, sorry.
Okay, somebody asked in the chat box that in what form will the report be in the AFS? So If Tony
Yeah,
can
I get
only,
that.
okay.
Yeah, so I mean, it's just entities that started integrated reporting in Nigeria, to be honest. In the annual report, we're only saying, please give us this disclosure. So the question is, where exactly would it be included in your financial statements? I think for the ones that I've seen in the United Kingdom, for example, that were doing their TCFD, so they just find like a paragraph. It could be at the start of their financial statement. It could be at the start of after your board reports, after your director's report, the chairman's speech, for example, then you could have like a paragraph that speaks to that. I mean, it's not cast in stone. The standard does not specifically say that, yeah, this is particular paragraph. We're only saying disclosure. Please get it on your financial statement. Let it be disclosed to users of financial statements, right? So another very instructive thing that I forgot to mention, right, is that this new sustainability reporting standard would require you as an entity to go back to your element of financial statement and begin to ask yourself what possible climate impact, for example, does it have? For example, you could pick PPE and say, hey, does this one have any climate impact? You could pick your revenue and say, hey, does this have any climate impact? You could put your investment and say, hey, does it have any climate impact? So that's one of those things that the standard also requires us to do. Because again, imagine having bonds, investments, and you buy bonds that are green, that are related to green energy. I think that there was one green bond issued in Nigeria last year, right? I think it's a Sukuk green bond, something like that. So, I mean, some of those bonds, if you hold it as an entity, it means that you need to talk about some of those disclosure in your financial statement. Tell users of financial statement that yes, I have this thing, and this is what impact I feel I should be talking about. Again, some of these things also are interwoven with some standards, right? Like I said, that you have a threat or an opportunity could be speaking to the fact that one, you need to take more impairment, you need to check your IS 16 accounting, you need to check your IS 38 accounting, you need to check your IFRS 15 accounting. A lot of things are just so interwoven in this. So again, there's no clear cut on this is where you should disclose the disclosure. Basically, in the financial statement says that please, it has to be there. Where exactly it is, then can then be maybe popularly the ones I've seen is right after before you have your financial statement presented, so people would have their sustainability related discussion and begin to have some of those disclosure made. Again, you would also be required. A lot of entities will also be required to consult guys who would help them put some of these reports together, right? So in very developed climes, because how do you measure, for example, impact of CO, carbon monoxide, what carbon footprint that you have? So it means that you need to also engage consultants who would be able to do some of these things. Again, information has to be economical. If the cost of doing that exceeds the benefit you derive at the end of the day, you might necessarily not do that. Also very instructive to say that this standard is a voluntary standard unless a specific say, for example, in Nigeria, FRC says, please, all listed entities are now mandated to do it, or the CBN says, oh, please, all banks start doing it. Unless, of course, that happens, some of these reports are still voluntary. Thank you.
Thank you very much, Mr. Olamilekan. We have another question from Ogunleye Dari. Can you please unmute your mic and ask your question, Ogunleye Dari?
Okay. Thank you so much. My question is now, beyond that, ESG has been around for a long time. Some entities have already adopted it.
So I don't get that.
Will be carrying out sustainability reporting for the first time. What challenges do you see them facing? Yes, I said, just like you said about ESG, that has always been around. IFRS S1 and S2 just now how to carry sustainability reporting. So for entities that are yet to adopt the ESG, that will be doing sustainability reporting for the first time, what challenges do you see them facing? Do you get my question?
Yeah, I get your question. and I think we've discussed one of them. For example,
Yeah.
how do you
Do you get my question?
Yes, I do. Yes, I do. Can I go on?
Okay. And also for accountants, do you see? Yeah. My second question now, for accountants, do you see a skill gap where accountants have to upskill in order to carry out sustainability reporting effectively? Thank you.
Yeah.
That's my
Yes.
question.
Okay, thank you so much. Yeah, I mean, the first one you talked about, you said that for those that are just adopting it, so what are they supposed to be doing? Yes, there has to be massive preparedness, massive preparedness in the line of how do we do this report in itself. And that's why I said that a lot of structured entities will most times engage consultants to put this report together, right? So they need to start talking about some of those things. And for entities that do not even have the structure in place before now, like they don't have the ESG structure in place, they don't have policy documentation. I mean, they have to start doing some of these things. Also can be done easily when you have a consultant who would handhold you to put some of these things together. So yes, that's what I see. I see a lot of engagement with consultants trying to put some of these things again because it is still relatively fresh. In the coming weeks, I see a lot of communique from FRC, from other regulatory bodies like SEC. In fact, SEC particularly for listed entities, asking listed entities to start talking about some of these things. Because again, if you look at the overall objective of sustainability reporting is to protect investors, is to protect capital markets, is to protect those that are using financial statements. Imagine somebody said recently that investors have even started conversations around ESG. They want to know whether you have plans, whether you as an entity, before they invest money in your business, so whether you are planning or looking towards ESG already. They start saying, okay, please, what's your net zero emission, this thing, footprint? Imagine bringing an investor from the UK where, for example, ESG is now 18. So if you in Nigeria now has some of those footprint already, that's like an add-on for them. That's like something to entice such investor, right? To say that, yes, we are in tune with global trends and this is what we want to achieve. So you better communicate your plan. Again, also specifically telling investors that this is my factor input. These are the threats that I see, and this is what I am doing to curtail the threats. This is the opportunities in the business line that I found myself, and these are what I'm doing to also make sure that all those opportunities are maximized. So I think that it will entice investment. So the biggest this thing that I see, to be honest, is putting the structures in place, structures in terms of policy documentation of the entity, structure in terms of putting the report together, in terms of regulation too as well, right? Specifically in Nigeria. So in the coming weeks, I know that we'll be having some of these specific comments from the CBN, from SEC, from PENCOM. To be honest, we'll start seeing some of these things. I foresee we'll start seeing some of this engagement. So that's one. Then the second question is whether accountant. Yes, a lot of accountants now. If you look at big four firms, for example, they now have a desk for ESG because, of course, the market is now there for them. So, so what is the need for accountants? Accountants need to now start attending discussions like this one we've attended this evening, for example, attending discussions around ESG, right? Attending, okay, so how exactly do we prepare this report? How do we actualize it? Even when I don't know how to prepare the report, how do I summarize the content of the report, right? Some of these things are what accountants, you and I, are supposed to be doing typically. Just stay abreast of some of these things. Be able to evaluate the impact of some of these things in financial. And for entities that would start doing including some of these reports from next year, I mean, for me, I'll start checking their financial statements, see how they've reported some of these things. Before now, I've also checked a lot of entities that have adopted the TCFD framework, some other framework like the carbon. This I can't recall the particular name now. So, I mean, I've reviewed some of those to say, okay, so I mean, what exactly do they write there? And a lot of times they'll talk to you about what board is doing. They'll talk to you about the controls in place. They'll talk to you about what opportunities they are seeing and all of that. So yeah, accountant is just to stay abreast, to be honest, get trained if possible. Yeah. So because of course there is massive opportunity within this line. That's how we can differentiate ourselves from whichever endeavor we found ourselves. I don't know whether that helps.
Yes, sir. Yes, sir. It really helps. Thank you very much. We have one question in the chat box. Someone is asking that can we say IFRS 2 is an upgrade on IFRS 1? Also, out of the four key elements, which one is the most important, sir?
Okay, I believe the person is saying IFRS S1 and S2. S2 is S1, not IFRS 2 particularly, IFRS S2 and S1, if I understand the question well. So the two of them are the main standards. So where one is sustainability related, the other is climate related. And like I said, climate is just a subset of sustainability. Sustainability is larger. I said the other time that sustainability is ESG, to be honest. It's just ESG. And I said the other time again that climate is a subset of E in the ESG. It's just a component because it's climate, right? Climate is an environmental factor. All of us will agree. So, yeah, so it's an element of E within ESG. So, IFRS S1 is broader, sustainability related risk, whilst S2 is what? Climate related disclosure. The same content. And of the four this thing, which one is important? There's a part of IS1 that talks about equal prominence. IS number 1 says that equal prominence. There has to be that information in the financial statement. No information in financial statement is more important than the other, and that's the honest truth, right? A very short disclosure like this might be very much more important as preparing that big table that we used to see, that balance sheet table we used to see, to be honest. So all information are important as far as financial statement is important, as far as financial statement is concerned, right? Equal prominence. So the standard has only said that, yeah, these are the content. This is what we should find in a sustainability report. So it behooves on us, stakeholders within the financial reporting space, to ensure that those contents are captured in the reports, if that makes sense.
Yes, sir. Yes, sir. Thank you very much. Thank you very much, sir. We have another question from Kudus Balogun. Yeah, please, you could unmute your mic and ask your question.
Okay, thank you very much. So just being forward looking, right? Because somebody asked a question around how do we report it, like, and I'm thinking at the top of my head, probably the person is looking at it in form of, is it going to be in words or numbers, right? And because of this, I'm thinking about it that I would like to ask, do you see a situation where though you've mentioned something around it being interwoven with other financial reporting standards, right? But then I would like to ask that, do you see a situation where because of probably some certain risk or some certain, what is it called? Should I say, based on this IFRS S1 and S2, that we have to recognize, say, provision or something of sorts? Yeah, that's just it.
Yeah, absolutely. Absolutely, brother. So if you look at environmental impact assessment, for example, right? Like I said, an entity that has said in their commitment statement, for example, that they want to go global, or maybe use the specific example we used to have. Yes, the social impact we used to have. If an entity commits that, for example, in 2024, they are going to be spending 50 billion naira on say welfareism of IDP, right? I'm just use an hypothetical example. So, I mean, that could be a constructive obligation within IS number 37, right? I think that's very much in tune with what Kudus is talking about, right? To say that if, for example, in your commitment statements, you've said that, oh, please, the entity has committed to spending 50 billion, for example, in 2 years' time, in 4 years' time. Auditors can then be asking you, Oga, please, it appears like you have a constructive obligation. So please tell us the present value of that 50 billion and recognize the liability in the current year, to be honest. So because, again, the liability is recognized when you are obliged, right? That's what we know on IS 37. So some of these holistic impact assessment, yes, is going to be done. Whether, and I mean, I like where you've come from, whether it's going to be qualitative or quantitative, right? Yes, it could be both. Obviously, we could have both quantitative. Remember, we talked about metrics and targets, and metrics and targets is even talking about numbers specifically. So it means that under metrics and targets, you are going to be calling out numbers. You are going to be saying, yes, this is what we want to do. This is the number. This is what we want, where we are going. This is where we are. So yeah, that's what I think. I think it's a mix of both quantitative and qualitative number. Is also a mix of, is holistic. We have to be looking at what exactly is the impact from an IS 37, like the example we just cited now, from an IS. We're looking at a commitment statement, a sustainability report, for example, and we're also picking up what possible accounting adjustment that can come out of that. Yeah, some of those things are what we are going to be doing typically. I don't know whether that answers the question, Mr. Kudus.
Okay, so the first one on the right.
Yes, it does. Thank you.
Okay, yeah, I think he said yes, it does. So please, do we still have any other question for our speaker? Okay, before we call it a wonderful evening, do we still have any other question? Okay, so in the absence of no question, I think we can call it a day. And as I said earlier, if you check the chat box and if you're not a member of the Finance Business Partners, but you're interested in being a member, use any of the links to join either our WhatsApp or LinkedIn community. And as I said earlier, this is a monthly meeting hosted by the Finance Business Partners where you get to meet and chat with professionals, the finest minds in the industry, and get updated and informed. So once again, thank you to everyone for making yourself available this evening. We really appreciate and we do not take it for granted. And to our speaker, thank you very much, Mr. Bill Olamilekon, for your time today. We really appreciate it so much. So I don't know if you could unmute your mic. If your hands are not too busy, just say a simple thank you for our speaker today. You could just unmute your mic and say thank you.
Thank you so much.
Thank you, sir. Thank you so much, sir, for your
Thank you,
time.
sir.
Thank you.
Thank you so much.
Yes.
Thank you so much for the time.
Thank you so much, sir, for your time.
So I think we are done for the evening. Thank you very much again, everyone, for coming, and I hope to see you at the September edition of Unit and Start to the Professionals. Till then, be good. Bye-bye.